Hello everyone, welcome to ACCA by Rida. If you're new to the channel, make sure to subscribe and hit the bell icon so you never miss an update because we are learning ACCA smart way step by step. So in our previous video, in our previous lecture, we completed chapter 3 from the Kaplan study text, right? So in which where we covered day books, petty cash and the journal and the cash book as well. But in that chapter we have just understand by one example or two example. I remember the journal. Today we are starting chapter 4, which is about one of the most important parts of financial accounting: the journal, the ledger and the trial balance. So the journal is often called the book of original entry, and it's where every transaction is first recorded in chronological order, that is step by step, right? Whatever the transaction occurred, it should be recorded in that date. It's called chronological order, so before it's posted to the ledger. Each entry in the journal includes date, accounts to be debited and credited amount, and narration or explanation of the transaction. But in ACCA level, you don't need to write the narration or explanation. You just know that what is the entry, what is debited or what is credited. So the journal plays a vital role in the accounting process because it provides a complete and detailed record of every business transaction, and it ensures accuracy, helps in detecting errors, or maintains a clear audit trail, right? So it's something like that. We have record each and everything accurately, right? Like dates, right? Amounts and the accounts, right? So each and everything is recorded accurately, then there would be no error. Now, and if there is an error, we have to find out and settle all those errors. So in simple words, if you understand how to record entries in the journal properly, you can handle almost any accounting problem. So today we will understand how the journal, ledger and trial balance are linked, starting from the source transaction and ending with the trial balance, right? Here, as you can see, that there are illustration, test your understanding with solutions as well, but I will recommend you to do it by yourself and check your answers at the end of the chapter. Let's move on to the example which I have here for you. Now, as you can see that there is a question which is related to Mr. A business, and now we are going to record one by one each transaction. So let's start. On January 1st, Mr. A started a business with cash $1 lakh, right? So by this situation, we know that cash is coming into the business, right? So whenever the cash increases, so this is the format of a journal. Not going to ask in ACCA to make the format, right? So it's just for your knowledge. Now, how we can record this transaction? We know that cash is coming in, right? Cash is our asset, right? Increases by 1 lakh. And then we are investing, right? We are Mr. A and we are investing in our business. So capital will be increased. Whenever the capital increase, it shows on the credit side. Simple. This is our first entry, right? Now, in second part, on 2nd January, Mr. A sold goods to Mr. B worth $150 on cash. So, Mr. A has sold, right? By sales, he's getting the cash, right? Cash is coming in by $150. And sales are also increasing by $150. Sales are our revenue. So whenever the revenue increases, it shows on the credit side. Third is Mr. A purchased goods from Mr. C worth $100 on cash. So Mr. A has purchase, so it's an expense, right? On cash $100. So whenever the whenever the expense increases, it shows on the debit side. $100 on cash, so cash is going out of the business, right? Simple. Now on the fourth, Mr. D purchased goods of $160 on account, means Mr. A has sold goods on account, right? Mr. A has sold on account. It means account receivable account has to be made on $160. Account receivable, Mr. D, right? It is better to write the customer's name because in business there are so many customers, so that the transactions should be recorded by their name. It is easy for us to record in future as well, to make the ledgers and all. Now account receivable, and the opposite side of the credit would be as recorded as sales, because due to of sales, account receivable account has to be made $160. Now on 5th January, Mr. A purchased goods from ABC company at $80 on credit. Now Mr. A expenses are increased, right? Purchases is our business expense, so whenever we purchase something, our expense account increases. And on credit means it's a liability, account payable, remember, by $80. So how we will record it? On 5th January, purchases has been done, right? It's an expense and we record it as an increase in debit side. And then accounts payable account will be open. ABC company, right? ABC company, right? So it is our liability. We increase it as $80, which is in the source document. Now on 6th January, these are all our source document transactions, right? We are just recording it in the journal. Now on January 6th, Mr. A received cash from XYZ company $1,500. Now Mr. A has received cash. It means there is some income. Like for example, Mr. A has a business of car showroom, right? So he has given someone his name, right, to open a franchise, and in that case of franchise, from that business he is receiving cash as an income, right? So the cash is received as an income, so cash is coming in, right? And income is also increasing. Income is our revenue, right? So revenue is also increasing by $1,500 both side, right? So it's like that. Now moving on to the 7th one, Mr. A paid salary to his employee $800. It means there is an expense of salary. So how we will record it? Salary expense account is increased by $800. So cash is going out of the business. It means assets decrease by $800, right? So this is our final transaction. So as you can see here, we recorded all the transactions in the journal. Now what is the second step? The second step is to make the ledgers. After recording the transaction, to make the ledgers, right? And how we can make it? I will give you the simplest formula. Now you have to check all the transactions, that how many title of account, right? How many ledgers we have to make. And remember, each title of account have their one ledger. Whether it is one or more transaction, only one ledger will be made. How? I will tell you. We have 3 cash account, then we have 4th cash account and 5th cash account. Now we will come here. Done. Then next, capital, sales. We have 3 sales, right? We have 3 transactions which are related to sales. This is 1, 2 and then 3. So after cash we will make capital account, then sales account, sales ledger. Then next, then we have purchases, account receivable, account payable and salary expense. This is the most easy part that I'm telling you, and do it like this, it will be very easy to understand. And the last is salary expense. Now the ledgers are made, right? Now what we will do, we have to check our transaction. We have to check the journal. Now on 1st January, cash is increasing, right, by $1 lakh. Cash is increasing by 1 lakh, that is debit side. So how we will record it? Now for all the ledgers, you have to keep it in your mind that debit sides are always on the left side and right side are for credits, right? For each and every one, debit, credit, debit, credit. Now for all of them you have to just keep it in your mind. Now on 1st January, cash is increasing by $1 lakh. So opposite we write sales, because of sales it is increasing, right? So for all of them you have to write opposite sides of title of account, right? Now next, we can see on 2nd January, cash is also increasing by $150, right? And the opposite we write as sales. 1st of January it is increasing because of the capital. Now on 3rd of January, cash is decreasing, right? It is on the credit side by $100. Then on 6th of January, cash is increasing by $1,500. Then cash is decreasing on January 7th by $800 due to salary expense. Now As we have recorded all of our transaction, we will just recheck that if any other transaction has been not recorded, right? So we checked all the transactions are recorded in the ledger. Now what we do, we have to find first the total balances of each. Now here we have to use our calculator, right? Now here, as you can see, all the transactions are recorded perfectly, right? Now we have to add all of the transactions like debit sides and the credit sides. Now here, as you can see, we have to write the balance. So here, as we know that the debit side is the heavy side, right? So the total balance of this debit side is 1,01,650, right? On the credit side, we also write the same amount, the heavy side amount. The balance which is more. Now, how we can close the ledger? We have to find the difference. How we can find the difference? We will deduct these amount by this, right? This is our closing balance, 900, right? Wait, I'll just remove this. Yeah, now what is the closing balance? The closing balance is the side which has lesser amount. So the credit side is the lesser amount, 900, right? So what is the difference of both of them? It is get the balance forward, which is the opening balance, and that comes on the heavy side. It is 1,00750. So this is our cash account, right? So this is our opening balance of the cash account, right? Now here on the capital, 1 lakh, right? Now let's check how many sales account are increasing. Sales is increasing by 150, 160 and 1500, right? And we get the total 1800. Whenever there is nothing in the opposite side, of course this is a common sense, we know that opening balance would be this, right? Now purchases are gonna be recorded. We have to check that how many time purchases are gonna be recorded. Purchases are here increasing by 100, then 80, and then that's all. Both time purchases are on the debit side increasing, and then the opening balance would be 180, right? Because there is nothing on the opposite sides. Now on account receivable and accounts payable, account receivable is increasing by 160 and account payable is also increasing by it is also increasing, but the amount is 80. And then we have salary expenses increases, and it will be shown on the debit side, 800. Now as we know, we have recorded all the transaction, but there is nothing on the opposite side of capital, sales, accounts payable, purchases, receivables and the salary expense, so we don't need to worry about what we have to do the balance. But on the cash side you can see on the cash ledger, but on the cash ledger you can see that there are amounts on the debit sides and the credit sides, and that's why we have to balance the amounts. Now as you can see here that we have recorded and we have made the ledger accounts of each title of account. Now we have to check whether our balances are correct or not, that we have recorded everything perfectly or not. So we will check it with the help of trial balance, and in which we will see that the debits are equals to the credit. Now this is trial balance, and it is so simple, you don't worry about the format and all, just serial numbers, particulars, and the debits and the credit. How we will record the trial balance? Now how to put the values on the trial balance? The first ledger is cash, right? So cash balance is 100750, right? You have to tally the amounts 100750. Then we have capital, which is credit side 1 lakh. Then we have sales 1800. Okay, here I have done a mistake, which is not the balance of 1800, that is 1810. 160 account payable 80, and then last expenses, salary expenses by 800. Now so when we sum all of these debits, 100750 add into 180 and then 160 and 800, we are getting 101890. So now as you can see here, after rechecking, now my debits are equal to the credits. And that's all about the recording and identifying and classifying procedure, which is to record all the transaction in the journal. Then we have to make ledgers of each title of account, and then we have to check all the balances, like debits are equal to the credit in the trial balance. And that's all about it in this chapter. You just need to practice the questions, and in financial account there is nothing but you have to practice in journal and then ledgers, and with that you can check your balances with the help of trial balance. And believe me guys, if you practice journal and the ledgers, so it will be very easy for you to understand the future questions and future topics. So I will recommend you to practice all these illustration with the help of solution, and it is nothing but it takes your time to practice. Now here I will solve test your understanding 1 in this video, and we'll check the answer. Now before solving any question, you have to check what are the requirements. What is the total entry of the credit side of the cash T account? Now make a T account of cash, and we'll check the credit side. What is the credit side of the cash T account? Yusuf enters into the following transaction in his first month of trading. He buys goods for cash for $380. So it's an expense. Cash is going out of the business, 380, right? Now he pays $20 in sundry expenses. Now he makes 1000 in sales. It means cash is coming in. Then he receives a bank loan of 5,000, right? Cash is coming in, it means 5,000, right? Then he pays 2,600 for fixtures and fittings. Cash is going out of the business, that is 2,600. So we get the total of 3,000, right, on the credit side as we asked in the question, and the C option is the correct. Now let's check the answer. Now here, as you can see, our answer is correct, that is C, right? Now the other questions are up to you. You have to practice it. It's all about ledgers and the journal. I already taught you. You just have to revise the topic and practice well, and then check your answers. And that's all about it in this chapter. I'll see you in the next video. Till then, goodbye.